Buy the dip. Yes, but when? Today in Car Chats with Robert. Hi guys, Robert Rivera here with the Rivera Trading Group in association with Trading Academy. Man, it's been a while since I've done one of these car chats, but I'm getting ready to do a road trip, and so I had to put oil in the car and do some other things, and so I am decided that let's go ahead and take advantage of this. Plus, having a good topic to talk about, which is, you've always heard, right, buy the dip. And in fact, some people are a little more emphatic and use some explicits in there to let you know that you should really buy the dip, correct? But, you know, when you have a situation like with Bitcoin or gold dropping as they have been dropping, when do you buy the dip? Of course, right? I mean, that's what really you want to know, because it drops and then it settles for a little bit and it looks like it's holding, and then boom, it drops again. And then it drops there and it's holding for a little bit and then it drops again. So when do you buy the dip? Have you bought the dip the last several days, you will be in real trouble, right? But if you have some clues as to where you should buy the dip, you will be a little more cautious and a little more, can I say, patient and waiting for it to reach certain areas. Okay, I'm going to give you 3 clues today as to how to buy that dip. Let's go to it. So here we have Bitcoin. It has been going up and up and up. I have made it on the daily so you guys can see a little better how this thing has been ripping to the top, right? It's been growing, going. People have been very bullish on Bitcoin for quite a while. And now we have a situation here where it has stalled and it has begun to drop, right? And we haven't gotten to the drop yet, but let's go ahead and move the bar replay here so you guys can see. Okay, that's the first sign right there, right? That something isn't right. Something ain't right once you see something like that, right? That's a big, massive, engulfing candle that closes the day near support. As you can tell, let me see if I can draw that support here real quick. Let me see if I can do so. Let's see. Let's do it real quick. Let's see. Right here, right? You can see that support right there. All right. So now, okay, is that the place where you buy the dip? Well, is that a dip? That's the thing right now, right? Is that really a dip? That huge engulfing candle coming down, that looks more than just a dip. All right, so let's keep moving this forward and see what we got. Okay, we have resistance there, support there. So obviously it stalled for a minute, then it broke it, retested it, and now there it goes. It keeps going, right? Boom. Oh, and that's the end of it, right? Because it's day by day. So this is the end of it. This is where it ended up today, the bottom of the day today. Where did it stop? That's the thing I want you to take a look at. Where did this stop? And if you take a look to the left, you can see that it stopped exactly at a major area of support. Looking to the left, right over here to the middle of the screen, you can see how that noise right there in the middle created another zone. Let's go ahead and draw that up real quick. Let me see if I can do this. I'm trying not to make this video too long, so this is already causing it to slow down. But there you go. You have an area of support right there, exactly where it stopped. Okay, that's one signal that you can use to find out where is a potential area. But one indicator or one signal is not good enough, right? Well, especially when you have a major drop like this. So what else can you use? Obviously, we can pull a fib, right? And I took these pictures already, but it seems like to me that I'm going to have to do this live so that you guys can really benefit from it. Let me see. How can I pull this, the fib on this? Ah, man, this is so far away. Let me see if I was to pull the fib from right around there. Okay, I see a spot right there, right? We have a retracement right here. We have a retracement, and then we have the move up, the bullish move up. Let me see if I can move the screen big enough so that we can make this big enough. Boom, that's the top, right? Swing low to swing high. And what have we got? We have a 78.6 basically stop, right? It stopped, well, it didn't quite make it to 78.6, but having crossed the golden zone, which is the 50 and the 61.8 of the Fibonacci, the next stop is the 78.6, and the 78.6 happens to be institutional money preference play as far as the Fibonacci is concerned, because the stop loss will be just below the 100% right there, and the upside is all the way up to the top. So that is just a great place to buy. It's no coincidence that price stopped there, right? We have two confluences now. We have the zone of support where it came to. Then we have the 78.6 that also gives us perhaps a confluence now that, okay, stopping near there, it's this could be a place where we could start looking to take a buy on that dip. Third way that I like to use, and my students know this because I use it quite often, is the stochastic RSI. Let me see if I can pull it up live now. That didn't do it. Let's do it one more time. There you go. Stochastic RSI way at the bottom. Now, of course, we're on the daily, so on a daily, that could stay at the bottom quite a bit. But if you take a look at it, on all the other moves that it did, when it was at the top, very peak, it was overbought. When it came down then to the next section right here, which right there in the middle, you can see how stochastic RSI was at the bottom. Then it went all the way to the top. Stochastic RSI is overbought. It dropped again. Now it's at the very bottom. So now we have a confluence of three different indicators that is telling us that we could buy this dip. In case you have any challenge with believing that this is so, let's go to gold so I could show you how this worked again also with gold this week. Okay, guys, for the sake of saving time and not having to do this all over again, I went ahead and took some screenshots, and so you guys could see this. Let me see if I can make this a little bigger so you guys can see better. All right, so you see how gold's been going up, up, up. Also, it finally broke below the 50%, and now you know some major move to the down is coming, right? Because it also broke a level of support. If you can see right there in the middle, those candles have stopped right there in the middle. Level of support broke that when it broke the 50 moving average to the downside, turning the green indicator red, and then it starts dropping right there, as you can see it right there. Okay, then it starts dropping. Once that candle closes below, you know this is a serious move, right? It broke support, and so it almost retests the 50 and it starts dropping again. Where could it stop, right? Where is the likely place to stop? Well, if you look at to the left, you can see that it had broken against that resistance before, right? So now what we want to see is that resistance now support, right? That's the usual move. You want to know if resistance has now become support. And here it comes. It comes dropping, dropping, dropping. And where does it bounce? Exactly there. The next candle confirms we're going bullish, and that thing took off over 300 pips. All right, so that is just the price zone. Let's see what next. What else do we have? Okay, so here we got the stochastic RSI. The stochastic RSI is showing us that it was at the very bottom. Again, when it hit that bottom zone, I mean that support, it hit that support. The stochastic indicator, stochastic RSI is also showing us an indication for a buy. Boom, it takes off, and you see all the pips that it gave it. Let's see what we have on the Fibonacci. Here we have the Fibonacci. The Fibonacci goes exactly to the 78.6 of that move. All right, it bounces right there. Now you have three confirmations again for the buy. Okay, so how do we know that this is the place where we should buy compared to the other ones? Where, again, looking at the bigger picture, we see the bigger move and are able to see what are the major areas where price has stopped at before, where price has had resistance before. In this case, it was resistance, then it became support, and it took off from there. So we have two examples on gold and Bitcoin, how institutional money likes to manipulate the market, right? I mean, right now here we have a complete reversal with gold. Okay, what are the chances that Bitcoin might do the same thing? Well, we're going to find out here in the next few weeks, but I've already taken a small position on the Bitcoin going up. I'm up $300 or $400, something like that right now. I'm going to hold that thing. I'll put it at a break even and let it ride and see what happens. Okay, that's it for now, guys. Here's that position that I took on Bitcoin just a few minutes ago. When I looked at it, it was like almost down to 200 and some because it was looking for support. Looks like it found support. It's bounced from there. It's a small account that I started with for trading crypto because I got to learn this, baby. This is the thing that we are going to be doing in the future for sure. Forex will probably be here forever, but cryptocurrency is not going anywhere. And people are so concerned about drops like it just did. Man, that's just a dip, right? When you look at the big picture, as I just showed you, that's just a dip. So I'll be putting this baby at break even and see what happens. If it goes to all-time highs, if it goes back to the all-time highs, I'm looking at some good coin here, okay? Take care. Welcome back. So as you can tell, there are several ways that you can make sure that you're not getting faked out at areas of support where price is coming to. First of all, we saw on Bitcoin that big drop that it did. Now we were looking at the daily, and we had to look at the daily because the move was so massive, right? It was so big. You knew at some point there was going to be some sort of retracement. So finally, we have a strong selling candle, an engulfing candle that came straight down to support. Okay, now at that point we're looking to see, okay, is this going to bounce from support or if it's going to break it? And obviously the next time, as you saw, it completely broke through. Now once it breaks, okay, where is the next place where it can go? And that level of support that we found was the only obvious place on the daily where it could go, because it had ripped up so hard before, right? And we saw again that it stopped at another level of support, right? An actual zone, price zone, where price has stopped there before. Okay, it came exactly to there. Then we had the confluence of the Fibonacci. The 78.6 is a perfect entry for institutional money. Likes to buy it at the discount. That's exactly what they just did. They bought it at the discount. Okay, everybody else is selling. They bought it at the discount. And then the stochastic RSI, which is a fantastic tool when you know how to use it. And this is not the stochastic nor the RSI. It's a combination of the stochastic momentum indicator and the overbought and oversold indicator of the RSI. It's a great tool when you know how to use it. And there we have 3 confluences on knowing when to buy the dip. Again, this is Robert Rivera with the Rivera Trading Group in association with Trend Trading Academy. I hope that you found the information helpful. And if so, please like, comment, and subscribe. God bless you.